Good morning, everybody. It's my pleasure on behalf of Chapman Tripp to welcome you to today's plenary session. With the election looming, we're privileged to hear firsthand from the Minister of Finance on his record and his plans for his government's future fiscal and budgetary management. We trust the Minister will recognise in those plans the importance of having a solid and well-functioning insurance, banking, advisory and retirement savings sector in which consumers and small and large businesses can have confidence. There are considerable challenges ahead for us with the monetary and fiscal impacts of COVID-19 still lingering, the costs of Cyclone Gabrielle and the Auckland floods yet to be fully borne, the uncertainty of what further impacts climate change and the global economy will bring, and the outcome of the elections yet to be decided. And if Eddie Jones is to be right, they still have to decide whether, we still have to have the Rugby World Cup decided as well, and that's going to have an economic impact apparently. We need to rise to these challenges, and as the title of this conference recognises, consumer confidence will play an important part in how we fare. Chapman Tripp is proud to sponsor this event. Our congratulations to Richard and the team at FSC for organising what should prove to be a fantastic experience. Thanks to Grant Robertson for joining us today, and I'll hand over to the Minister of Finance, the Honourable Grant Robertson, and then to him and Jack for their pitch-side chat.
Kia ora, nā mihi nui ki koutou katoa, he mihi ana nā mana whenua ki tēnei rohi Ngāti Whātua o Ōraki a tēnā rā koutou katoa. E nā mana e nā reo raurangatira mā ana hoe whā, tēnā koutou, tēnā koutou, tēnā koutou katoa. Thank you, Tim. It's great. I feel like I should sort of drop kick this into the top corner over there. That would perhaps start us off in an unusual way, but I do want to acknowledge everybody involved in the FIFA Women's World Cup. I particularly want to start by talking about that because it's a massively positive occasion before I get on to some of the thoughts I have on the global economy, which perhaps are less positive than the football. But I do want to acknowledge what's been an amazing tournament for both Australia and New Zealand as co-hosts. Just over 700,000 people have attended the matches in New Zealand. And for me, as not only the Minister of Finance, but also the Minister of Sport and Recreation, it's better than I could have dreamed of to see 43,000 people on a cold Tuesday night in Auckland at Eden Park for a football match that didn't involve New Zealand is just extraordinary, and the fact that that happened 3 weeks in a row is even more extraordinary. For us, as I say, it's a big part of our sport strategy, our women and girls in sport strategy that we launched a few years ago to have these big events, and they're great for the economy. 20,000 plus tourists during a reasonably low season normally, and the hospitality industry certainly has appreciated a bit of a boost right now, but it's also just tremendous for the mood of the country and for the ability to show how sport can draw communities together, and particularly around women's sport. And, you know, when I first became the Minister of Sport and we talked about wanting to hold these World Cups and lift the visibility of women's sport, there were one or two cynics about that. And I hope those people will realise now that these are some of the world's best athletes that you're seeing here playing the most extraordinary quality of football, and it's been such a privilege to host the teams in New Zealand, and possibly for the first time ever, go Australia. You know, in all seriousness, the Matildas are an extraordinary team of people, and the way that they've captured, I know there's plenty of Australians in the room today, the way that they've captured the hearts of Australia is just incredible, and I'm extremely fortunate and lucky to be going to the final at the weekend, and I really hope it is Australia who's there, because it'll be just the most tremendous occasion. That's probably the end of my Australia love for the morning. Fair to say I'm not looking to take Eddie Jones on as an economic advisor at this point in proceedings. He possibly should focus on his rugby team because he's got a bit of work to do there as well. So as I say, I wanted to start on the positive note of the Football World Cup because we obviously do live in pretty challenging times, and I'm conscious of our time today as well that I won't speak for too long, but I think it's worth me making 2 or 3 opening observations about where we're at from an economic perspective and the approach that the government is taking to that. And as I say, the global outlook's not looking that great. While the IMF's latest projections for global growth have picked up just a tick from where they were, they're still talking about 3% global growth over 2023 and 2024, down significantly from previous years and pre-COVID, and clearly not picking up at the rate that many thought that it would. You can see those numbers flowing through in a number of different statistics. The one that I think New Zealanders will look at with some alarm are global trade numbers, where global trade growth was 5.2% in 2022 and is projected to be 2% in 2023. And you can all see and you all know the reasons that sit behind that. The backdrop of COVID, the supply chain constraints and issues that have carried through, albeit starting to come off from that, the resulting high inflation and then interest rate responses, clearly the war in Ukraine. And I just echo the comments that Richard made at the beginning, which is that if you're in Europe, the war is still ever present. And it's drifted a little bit out of the headlines of the TV news here in New Zealand and probably in Australia as well. But that fundamental shadow over the European economy remains and is a significant constraint economically, as well as an extraordinarily difficult time for the people of Ukraine and the rest of Europe. And then we have the issues in China itself, as well as China's relationship with the United States. It's interesting, actually, given the topic of this conference, that the latest articles you probably have all been reading about the Chinese economy indicate that consumer confidence, or lack thereof, is one of the big issues that's driving a slowdown in China. It's all relative. Chinese growth forecast to be around 5%, which many of us would be clamouring for, but that is obviously significantly down from where it was, driven in part by huge issues in their housing market, which is driving the lower consumer confidence from middle class consumers particularly, but also the tension in the relationship with the US, and we've seen some recent export and import controls from the US hitting China, which also is going to make it very, very challenging for them. Quite clearly that flows through to New Zealand and Australia. For us, we've seen that most recently in Fonterra's farmgate milk price, with the forecast being down to about $7 a kilo of milk solids. That is around about break even for a lot of our farmers, and certainly makes it tough for many of those farmers to do the kinds of investments that they want. So that flow through from China is definitely having a big impact on us here in New Zealand as well. As a global picture, it's challenging. Everybody wanted us to come out of COVID stronger and be able to move forward quickly, but the reality of life is that is not what has happened, and we are facing a continued period of slow global growth. And for a small, open economy like New Zealand, that is a big challenge. Turning then to the New Zealand economy, in a sentence, I think the way I would describe us is resilient but impacted. We have been resilient through COVID. Our economy is about 6% bigger than it was before COVID. Unemployment 3.6%, slightly up from where it was, but historically very, very low. Wage growth reasonably solid for a lot of people. At a macro level, the government's books, we continue to have some of the lowest level of public debt in the world. We've got a pathway to surplus, albeit a very challenging pathway to surplus for the books. We've got inflation starting to come down from the very high levels it was. But none of that stops the story for households, businesses and the economy as a whole from being incredibly challenging. At a household level, clearly rates of inflation, rising interest rates have been extremely challenging for many, many households. At a business level, We're starting to get on top of some of the labour shortage issues. It's usually used to be the first question I'd get in every business audience. Now it's about the third or the fourth. So there are still issues out there, but we are starting to see those challenges turn around. We've got net positive migration of about 86,000 annually on the last numbers. That is big. That in itself starts to raise other issues around infrastructure and so on, but it is actually a big positive turnaround for New Zealand after what we went through with COVID. But at a business level, it's quite clear that the higher interest rates, dealing with higher wage bills and some of the insecurity coming off the back of COVID is starting to play out. And we've seen that in the government's books, in the government accounts to the end of May, 11 months to the end of May, that corporate tax revenue is down, and you can start to see the impact of that flowing through. Other parts of revenue are good. PAYE is up because people are in work and earning wages, but we can see the strains that are on at that level. And as I say, economy-wide, there are challenges, but we are resilient. Moody's have just recently done their analytical report for us for the year, and it's quite clear when you look at that the underpinnings of the New Zealand economy remain strong. And part of that is actually the financial institutions who are represented in this room today. So I do want to acknowledge that and say that those underpinnings are important. Having a strong banking sector, having a strong financial services sector, alongside good government institutions, is what the rating agencies look at, and it's one of the reasons they're comfortable with where we are, despite the challenging circumstances. And that Moody's report came out, I think, either the same day or the day after. Fitch actually downgraded the US economy. And so while it's a challenging time for New Zealand, I think those core underpinnings make us resilient, but there is absolutely no doubt that we are in a very difficult and challenging time and will all be impacted. Finally, just before we get on to Jack and I having our chat, I just wanted to say very quickly what I think are the three main underpinnings of what we need to do as a country from here in terms of our economy. In a sentence, what we're driving for is a higher wage, low emission economy that gives economic security to everyone. Higher wage is code for more productive. It just turns out productivity is one of the most boring words in the English language, and so if you tell people what the outcome is, higher wages, they tend to listen for just slightly longer. From our perspective, there are three things that work to achieve that plan. The first of those is striking a very careful balance with how we manage things fiscally. I set out 2 fiscal rules for New Zealand in our budget in 2022 to keep net debt under 30% of GDP and to run an operating surplus across the forecast period. As I said before, there are some challenges to the latter of those points, but it's really important we do it for the sake of future generations. So we've got a focus on making sure we are more efficient in what we do. We have a sustainability and effectiveness program that we're running across government to find savings and to find ways of being able to meet those fiscal goals. You won't be surprised to hear from me in my most political comment of this morning, until Jack makes me make more of them, is that now is not a time for big change in our taxation system. This is a time of uncertainty and volatility, and stability in that, I think, is actually very important. The second part of our plan is a massive investment in the underpinnings of what makes our economy work, in particular infrastructure, but also our public services. We've got $71 billion worth of infrastructure expenditure that's going to be rolling out across the next 5 years, but much of that is just keeping up. Building schools, building hospitals, upgrading our rail network, upgrading our broader transport network. So in the budget, we want to push on with some nation-building activity, and we don't have the time today to get into the detail of it, but the National Resilience Plan that we announced in the budget is my attempt to try to get us ahead. If there's one thing I've learned out of the last few years, it's that our ability as a nation to be able to not only mitigate climate change impacts, but also adapt to them is the biggest challenge for any future government, in my view. And so the National Resilience Plan is aimed at that, getting ahead, actually making Build Back Better a reality. So we put $6 billion on the table for that. I had this bright idea in the beginning of the budget process in the middle of last year, and then Cyclone Gabrielle and the Auckland anniversary weekend floods hit, and now all of the money that we were going to put into other things goes to those regions in the first instance, but it needs to. But if I can proffer out a challenge to this audience, it is the next stage of work in the next government that will be critical. What is the way in which we make New Zealand more resilient and more adaptive? What is the place of the insurance industry in a period of time where the risk modelling approach is challenged so much by climate change? How does government and the private sector partner to make sure that people do feel secure, to make sure that there is a way of being able to adapt and respond? We all have a role in that, and I would suggest to you that perhaps some of the current products and some of the current models aren't actually fit for purpose for that, and I think we need to work together on that. Investment in education and health and so on is important. And then finally, the third part of our plan, along with that fiscal balance, along with that investment, is actually the kind of economy we want to grow. And that is one where we acknowledge climate change. We do our best for future generations to mitigate, but we also look for the opportunities there. The recent BlackRock deal that we announced around crowding in $2 billion of investment in renewable energy is a place that we can start from. New Zealand is the best in the world at renewable energy, and we need to use that to be able to both develop our own options but also sell our technology to the world. Significant investment in research, science and technology, in skills and in lifting the value of everything we do. New Zealand must diversify what we make and what we send out to the world, and that is the core part of our economic plan in a range of sectors. So with those three areas in mind, that is what I think we need to focus on as a country, getting the balance right between our fiscal obligations to the future and to the people of today with the cost of living, investing in our infrastructure and public services, and creating an economy for the future that grows those high-wage jobs. Thank you for listening to me today. Thank you for the FSC for the invite, and I look forward to your questions. Nō reira, tēnā koutou, tēnā koutou, tēnā koutou katoa.
Before you sit down, Minister, come on. On the head, on the head. Brilliant. Well done.
Very good.
It's always
I should really be doing that back to you now, Jack. You know that. Finally, it's my chance.
precarious in an election campaign when you're asked on the spot to do anything with a ball, I would think. But thank you very much for your time. I would usually start something like this by saying, what are you expecting in the next 12 to 24 months, given the MPS is out this afternoon? What are you expecting in the next 12 to 24 hours?
Yeah, you know that I don't tend to comment on the Reserve Bank Governor's decision, or the Monetary Policy Committee decisions, because it tends to do things to the markets that people in this room understand I shouldn't be doing. I guess the signals have been pretty clear, haven't they, from the bank over the last couple of monetary policy statements around where they think they are. I know there's, I think every commentator, I think, has said that they'll hold at this. That's what I've been reading. But it's, still a challenging time. Inflation's coming down, which is good. But, we give the Reserve Bank a job, and it is to keep to keep inflation between 1% and 3%. That's their job, and so they'll continue to use the tool they have.
The budget deficit has already expanded, with the corporate tax take about $2 billion lower than Treasury's forecast released at the time of the budget. The pre-election fiscal update comes out on September 12th. Are you preparing for further declines in revenue relative to Treasury's budget forecast?
Look, as you say, in the 11 months to the end of May, we were $2 billion behind their forecasts. They're in the process of finalising those right now. It would be fair to say all of the things I just said when I stood up, the economy isn't showing signs of massive improvement to turn that around. So we'll see where that lands, but I certainly accept the proposition that times are tough. Corporate tax revenue is not where it was meant to be. And as I said, as a government, we know that we've got to do our bit. So we launched this fiscal sustainability and effectiveness program at the budget, working through with agencies where they can do their bit to try and offset some of that. The one thing for me that is important for people to know is that our expenditure as a government is actually tracking slightly under where it was forecast. It's just that the revenue Treasury forecast is also tracking quite a bit under.
So you said it's a challenging pathway if we're to return to surplus as per your forecast at the moment. Do you expect, realistically, given the international climate at the moment, we're going to have to delay that return to surplus?
Well, again, Treasury will finalise their forecast soon, but I've set that goal as a fiscal goal to get there across the 4-year period, across the forecast period. I'm still committed to that goal as I am to the debt goal. And it is that balance. You know, we've got people really having a tough time at the moment with the cost of living. We've got to be doing things to help people in the here and now and balance that with where the future goes. So I'm committed to the goal. We'll see where the numbers land in the next few weeks, but it is tough.
You talked about a lot of the international influences. What responsibility should your government take, reflecting on the last 6 years, for the worsening fiscal position?
I stand by the decisions we made over this period of time. You know, there's a new branch of economics out there called hindsight economics, and there's a few professors of it in Parliament at the moment. You know, I think people need to take themselves back to March 2020 and think about where we were. And yeah, we did throw the kitchen sink at it, and that's because we wanted no regrets. We wanted to help with cash flow and confidence. So I'll take responsibility for that decision because I think it was the right one. We always said that there would come a time where we would have to stop those emergency COVID responses and start moving towards a more sustainable fiscal position. And that is the time we're in right now. So we do bring over that 4-year forecast period government spending back to 31.5% of GDP, a little above where it was before COVID, but back in that sort of range. So that requires tough decisions and hard work. Did we get everything right over the last 3 years? Of course not. But, you know, I think we did a good job. Yeah, that's exactly what the journos always ask. I'll leave that for you to judge.
No,
Jack.
but I mean, have you got something in mind that you would, with the benefit of hindsight, and I think we can all appreciate what you're saying, is that you made the best decisions you could with the information you had available at the time. Yeah. But with Captain Hindsight paying a visit?
Yeah, no, I mean, it's not a specific policy or anything like that. It's, you know, it's that we had to make decisions about what we thought the level of stimulus was that was needed. Those decisions were made both by me, but also by the Reserve Bank as well. And so we're all collectively part of that. But like I said before, when I take it as a stock, the economy's 6% larger. We've got 3.6% unemployment. I had a pretty legit report that said it would be 10% unemployment. So, you know, taken as a whole, I'm okay. But, you know, when you and I are in our dotage, Jack, and we can look back, I'm sure I'll be able to find an individual policy to look at. But for now, I'm just focused on moving forward.
Not a time for big changes in the tax system, you say. This is a room of people who are, I think I can safely say, probably more fiscally and economically literate than perhaps some voters. I'm yet to see a tax expert or an economist come out and support your GST policy. It corrupts the simplicity of GST. It disproportionately benefits people on higher incomes. I can't understand how a groceries commissioner can be expected to monitor the pricing for something as seasonal and regional as fruit and veggies. It saves the average shopper as little as $4 a week, and it costs more than $500 million a year. To anyone who actually cares about good policy making, how can you possibly justify the changes to GST?
So you don't like it much? Is that what you're trying to sell me?
I'm merely reflecting sentiment amongst those with far greater expertise in this space.
Yeah, look, to me, it's part of a package of cost of living initiatives, and on its own, if it was the only thing we were doing, I think there'd be a very legitimate criticism to say, really, is that all you're doing? But it sits alongside some of the other initiatives we've got. We announced extra money for working for families on the same day.
In 2026?
No, that one part of it was 2026. One part of it was the 1st of April next year, the lift to the in-work tax credit. So that is coming in. We've got the prescription charge change that we made. We've got the extra money for early child education, public transport, so on. So there's a package there. So I see it very much in that cost of living frame. The idea, and I mean, you know, because you've asked me about it in other fora, I came at this as a cynic of this policy, but actually the more work I've done on it and the more I've looked at it, I think New Zealand is not that different from anywhere else in the world where there are a zero rating or exemption for certain things within a VAT or a GST system. So we can make it work. I acknowledge it's new and therefore we get lots of questions about it, but it is not, if everyone else in the world can do it, so can we, and it can help with the cost of living to some extent.
The storms this year came as a shock to many New Zealanders. How has the work that you have done with industry influence the way that we are likely to handle proactive managed retreat questions in the future? Because my sense is that it's reactive, essentially, this time around, right? We've said you've been hit by a storm.
Yeah.
We're going to try and help you buy out your home or change your community, make it more resilient. But in the future, we're going to have to make proactive decisions.
Yeah, and I alluded to it in my speech that the sort of ad hoc way that we've responded to this, I think we've done as well as we can, but it clearly isn't a sustainable response when there are going to be more intense and more regular weather events of this sort. So one of the things I actually want to thank particularly the insurance industry for is the way they've worked with us on designing the managed retreat criteria that we've had. What we functionally did there was take anonymised insurance company data and put it alongside local council data to be able to say, this is what we call category 3, you can't come back here. That collaborative and cooperative approach is essential now going forward to work out what we do. But as I noted before, in order to get ahead, the government's got a job to do with flood protection, with the adaptation type things that we can invest in, and we are, and I mentioned how we're doing that. But the thing I think is now the challenge is, what does this look like from effectively a financing perspective? And I've said it before in the last few months, is this the time for an EQC style levy for other events like floods, if they're going to be that regular? Now, I haven't taken a position on that, but that's the conversation we need to be having. What's the baseline that we can do, and then work with the insurance sector and others on what products are around that. But I really think it's a challenge for all of us. I mean, I'm not in the insurance sector, but it seems to me that climate change is an existential issue for insurance. And I think my own view is we need insurance. We need a strong private insurance market. The government can work alongside it, just as we do with EQC. But there is a big piece of work that we've now set in motion, which involves working collaboratively with the insurance sector. And Sir Brian Roach is running our Cyclone Recovery Task Force. He's in very regular contact with the insurance industry. And once we get through the little negotiations we've got with local authorities at the moment, the next job is, what does this look like in the future?
And what kind of time frame are you putting on that?
Clearly post-election. So the idea is to finalise the negotiations with the local authorities before the election, so we get the people right now who are so uncertain and so vulnerable, get them sorted, and then after the election, I think this is one of the most important bits of work the government's got to do.
Question from the floor, and thank you for your questions. Keep submitting them through the app if you can. How do you think the proposed NZIIS, the Income Insurance Scheme, and its public response might have differed if the life insurance industry had been involved in the original design process?
Clearly a question from someone from the life insurance industry.
I suspect so.
Look, I think, I don't know is the answer to the question, but clearly from our perspective, we wanted, it's a similar thing to what I was saying with the EQC, we wanted to create a system, as many other countries do, that have certainty for people when they lose their jobs for whatever reason, or no fault of their own. There is a private sector role in there, but we felt that there was a universal scheme that could be created. So we did have some conversations with the insurance industry in the design. There was plenty of time for people to input. They did. As you know, it's on hold, but I continue to believe at a principle level that a universal scheme around that is an important element in giving people security.
You mentioned the labour market and some of the pressures in the labour market starting to ease just a little bit. Looking at the list of people who've come in, we are bringing in thousands of fast food cooks, lawn mowers, handymen, etc. Is your immigration reset to this point fostering the kind of high-skill, high-wage economy that you're aspiring to?
I believe it is. I mean, yes, we do have some people in sectors where, they aren't traditionally seen as the high-skill, high-wage sector, but equally alongside that, the vast bulk of what we're doing here is about bringing in the people we need in skilled sectors, in the gaps we've got in engineering or the gaps that we've got in some of the technology sectors. But yeah, we also have gaps in hospitality. We also have gaps in some of the basic construction trades and so on. We've tried to get the balance right. I think some of the things I've seen in the media in recent days around migrant exploitation are appalling. And we are moving swiftly to try to get to the bottom of how that's happened. But I think on balance, the accredited employer work visa was an important part of making an immigration system that was hugely frustrating for people, easy to navigate. Clearly there's some elements in it that we now have to work on because it's completely unacceptable to see what we're seeing.
I know we've only got a couple of minutes left, so I'm going to finish up with a couple more questions from the floor. You've been in office 6 years and there's been no major review of KiwiSaver. Why?
Yeah, I mean, we've done bits and pieces around KiwiSaver, but not a huge review. The truth is, it dropped off the program during COVID. It was there, it was in our work program to do it, but other things took over from it. This might sound a bit twee, but in part it's because it's actually working. Like, it actually works well. KiwiSaver is going well. There's no doubt room for improvement, but we did make the changes around the default providers, and that was quite a big shift. Took quite a lot of our resources when we did that piece of work. There's definitely more work to do within KiwiSaver, but actually it is still working well.
Why is the shift to open banking taking so long?
Are there any banks on any panels later? Yeah, look, from a regulatory perspective, it is a big deal. I mean, let's not be flippant about it. It's not something that you do overnight, and it does require a high level of collaboration and cooperation with ourselves and the banks. But some of them say they're ready to go tomorrow. Some of them say it might take a bit longer, but we're still making progress.
You have been in politics a long time now. How does this contest in this election, October 14th, compare to previous races, and how do you honestly rate your chances?
It's going to be close. That's what it's going to be. And actually, the polls do show that. A little bit of up and down when the events of the day get in the way. But this will be a very close election. It'll be a real MMP election. 2020 was clearly an anomaly for MMP to have one party over 50%. I don't think that will happen very often at all. So we're back to the building of coalitions, working out how parties can mix and match together. So no, I feel good about it. Like you say, I've been around a while, and I feel like the last few years have been enormously challenging for New Zealanders, and we feel that as a party we've helped everybody through that. Now is the time to deal with the issues and look ahead, as I said before. And I think we've got the people, we've got the plan to do it, and yeah, I'm optimistic.
Well, we know you've got to shoot back to Wellington. Thank you so much for your time. Good luck for the final this weekend. Join me in thanking Finance Minister Grant Robertson.
Before you go, we'd just like to call on Nigel Jackson, CEO of BTNZ, to just give a quick vote of thanks on behalf of the FSC board. Nigel.
Thanks, David. Tēnā koutou, ko Nigel Jackson, tōku ingoa, he's CEO of BT Funds Management, aho, nō rea, kia ora koutou. Hi everyone, it's great to see everyone here today. Minister, on behalf of the FSC, I'd like to thank you for your keynote address this morning. 2 months out from an election, the political environment's clearly hotting up. And clearly there are a range of significant challenges facing the next government. As you've outlined, the fiscal challenge, investing in infrastructure and services, and preparing for a low emissions future. And this environment creates a real challenge for us as an industry to influence other long-term, lower profile issues such as low levels of life and health insurance and an ageing population with not enough funds for retirement. So it's critical there's ongoing dialogue between government and industry to ensure there's stable, predictable policy to support New Zealanders in their times of need and build consumer confidence. Minister, as Richard noted, I'd also note you've been a great supporter of this event, appearing at every conference since 2017, which is a real credit to your longevity and willingness to engage. So, ladies and gentlemen, please show your appreciation to the Finance Minister, Robertson, in the usual way.
Thanks, guys.